The government's response to the COVID-19 pandemic, beginning with the CARES Act, brought extraordinary relief to business owners. The programs largely targeted business owners to encourage them to keep people employed through the depths of the pandemic and resulting economic recession. One tax provision, the Employee Retention Tax Credit, or ERC, was overshadowed by other programs such as PPP loans and EIDL grants and loans. But the ERC, which can give employers up to $26,000 in cash for each employee, is a tax provision that every business owner should pursue. And even if you haven't yet taken advantage of the ERC, there is still time to file refund claims to take advantage. I'm Nick Rosado. I'm a tax lawyer with my own tax practice in San Jose, California. Here's your tax update. The ERC is a refundable tax credit, which is like a grant from the federal government. Refundable tax credits can completely offset and refund any taxes that you paid and then cause the government to refund additional amounts up to the full amount of the credit. Therefore, the full credit for which you qualify will result in a cash payment from the federal government. There are no restrictions on your use of any tax refund based on the ERC that you receive, meaning such funds need not even be used for business purposes. This is certainly an advantage that the ERC has over PPP and EIDL loans. For-profit businesses, tax-exempt organizations, and tribal governments are eligible for the ERC for all relevant quarters in 2020 and 2021. Governmental colleges and universities and hospitals and medical facilities are eligible for relevant quarters of 2021. We talk about quarters for ERC eligibility because the tax credit is tied to your Forms 941 Employer's Quarterly Federal Tax Return and the employment taxes that you pay with those returns. The relevant period for which the ERC can be claimed includes a portion of the first quarter of 2020 through the third quarter of 2021. Businesses who average more than 100 full-time employees in 2020 and 500 full-time employees in 2021 have significant limitations on claiming the credit. But for the employers with less employees during those periods, the ERC can be claimed while the employer experiences either a significant decline in gross receipts or a full or partial suspension of business due to governmental orders related to the coronavirus disease. A significant decline in gross receipts means a decrease for 2020 of 50% when compared to the same quarter of 2019, meaning you would compare your income for second quarter 2019 to second quarter 2020 to see if there is a decrease. The ERC for 2021 has more generous provisions, and the decrease when compared to 2019 need only be 20%, and you can elect to use